Hello, everyone. I hope you guys are having an amazing day. The SPY did indeed break below 457.31 and close. The 30-year bond is also showing tons of weakness. So in today's video, I'm going to talk about the SPY, the NASDAQ, the IWM, the 30-year bond, of course, and then Bitcoin and Ethereum. So let's get started with the video. So the SPY broke below this very important level of support today at 457.31 very clearly, right? The entire market was very, very red today. And what I'm thinking is going to happen is basically, as we broke down below this level of support, I was saying we were going to come back down and at least retest 453. But most likely what's going to end up happening is we're going to potentially come back and retest 451. That's what I personally think. We're going to come back and retest 451. So right now, this is a lot of weakness. This trend line, though, is very, very important. So tomorrow, this level of support for this trend line is going to be approximately 453. So 453 is going to be a very, very important level of support for tomorrow. If that breaks, then we're definitely, in my opinion, going to come back and retest 451. Then if that breaks, then what will most likely end up happening is we're going to come and flirt, potentially capitulate down a bit below 450. And then come back and maybe retest around the mid 440s. But that I don't think is going to happen, quickly. So in my opinion, what could end up happening now is we will potentially just start chopping around in this area and get people very bullish or bearish and essentially make retail lose a lot of money in the short term, which is why right now it is extremely important not to take any trades or swings essentially until there is a very, very, very high chance or high probability that the trade is going to work. Because the number one thing in trading is to make sure that you have enough money. The goal in trading is to not lose money. The longer you have money to play with, the more opportunities you're going to statistically have. Okay? Do not chase plays every single day. That is not how you trade. If you want to day trade, that's completely different. But for swinging or for overall market sentiment, some sort of, longer term positions, do not try to enter a new trade every single day. Patience will be rewarded in this market. So right now, technically, right? So the SPY, so here is the MACD, right? The MACD is obviously not as low as it was on January 7th or January 10th, but the price is lower. So what that's telling me is there's still more room to the downside, because if the MACD currently right here is not as low as it was when the price was lower, that means that there's a divergence. So that's very, very bearish, right? Number two, the RSI is still not yet oversold, even though we had a major break of support, huge red side, and we barely really, what I was showing before, the stagnation in the RSI was very bearish. This is what I mean. It worked out pretty well. So, now essentially we need to see how overextended we can get on the SPY to the downside. What I really want is the SPY to fall down lower to give us a higher probability bounce. That's essentially really it. Right now, there's no point of trying to catch a trying to catch a knife. Wait until we come back and retest 453-ish, and we need to see how the RSI responds. We want to see the RSI become very, very weak. We want to see the RSI be very sensitive to downside moves. That's what we want to look for if we're bullish, okay? We also want to see the MACD completely fall much, much lower. So in the short term, I do think, for example, tomorrow we could have like a little bit of a bounce. But again, that is not a sign to become bullish again, all right? We need clear reasons for that to happen. So right now, there's my analysis on the SPY. I still think that we fall down much lower. And overall, it'll be better longer term. The more we play around at these levels here, essentially what hedge funds and banks are trying to do is they're trying to make retail get chopped up, because they don't want retail investors to participate in the market. That's really what a lot of this, that's really what a lot of this stuff is going on, is because they like to manipulate prices in terms of data and getting option value and selling options, etc. So they get a lot of that through volatility. So when there's volatility in the market, they make more money. So just be aware of that. That's why I think that the next few days, maybe the next few weeks, can be very volatile. Towards the end of the month, though, there is tech earnings. So the tech earnings could be bullish for the market, but until then, it's really a toss-up right now. But right now, definitely, I do think that the market is going to end up falling much lower. So yeah, there's that for the SPY. Let's go ahead and take a look at the IWM. So the IWM clearly didn't want to have a bullish January. You can see that it closed outside of the lower level of the B band. So usually when this happens for the SPY or the NASDAQ, it's a very good buying opportunity. But I do think that, it's still not worth me buying anything right now. What I would want to see is a much lower drop, potentially to around 204.80, which is a very important level of support, and then potentially 201.50. So that's really what I want to see. So right now we can clearly see that the IWM came and retested this trend line and failed at it, and then that's when we really broke to the downside. So in my opinion, the fact that we broke down below lower here, the RSI is still not yet oversold on the MACD or on the IWM, and the MACD is still not as low as it was before when the price was lower. When the price was higher here, the MACD was lower than it is right now. So that is very bearish as well. So that's why I think the IWM can still show some more weakness. We might have another, we could have another day or two of weakness, but right now, I do think that the market is just going to be very choppy as we fall lower. So just be careful. Just be very, very patient. There's no point of rushing anything. What we want to really, really see is the SPY become massively, massively oversold in terms of the Bollinger Bands. And then we want to see much more oversold conditions in the RSI and the MACD. So that's what we're really, really waiting for before we, aggressively go long. All right, so there's my analysis on the IWM. Let's go ahead and take a look at the 30-year bond and the NASDAQ. All right, here is the 30-year bond. The 30-year bond right now is going to be the key determining factor of whether or not we are going to be bullish or bearish. Right now, the 30-year bond is breaking below the supports that were created back here on January 7th and January 10th. We also broke down below a very, very important level of support here. At 153.29, right? But then now essentially what we really, really need to see is if, in my opinion, the 30-year bond breaks down below this 153 level, this support level right here, essentially, right? The SPY is going to definitely come, potentially, I think it's really going to break down below 453 and then potentially even fall down to 451. So this weakness in the 30-year bond supersedes any sort of bullishness that we see in the equity prices. So if the 30-year bond is going to be this bearish, then there's no reason to be bullish on any stocks. Because what the 30-year bond falling basically means is that the NASDAQ, also falls, really, right? So the 30-year bond also falling shows that investor sentiment is very bearish for the longer term in the stock market. So the fact that this is happening right now is very, very bad. I was talking about this in the weekend video, and this is very, very bad. So, but it's a good sign because this will give a really, really good buying opportunity. So right now, in terms of the technicals, we can see that the RSI on the 30-year bond is finally again oversold, right? But the MACD is still overbought. And as you can see here, this blue line barely even fell. It barely even fell down, even though we had a huge, huge red day here. So that is telling me that there's tons more room to the downside. Most likely what's going to end up happening is most likely going to chop around maybe. But if this level breaks, then this 150 level is going to be very, very important on the 30-year bond. And that is really a major level of support. If this breaks, then we can fall down to 148. But, you know, one support at a time. But yeah, hopefully, if we fall down to 150, the RSI will be very, very oversold. And then by that time, the MACD will also become a bit more oversold on the 30-year bond, giving a better opportunity to go long in the equities. But I mean, right now, this is very, very bearish for the 30-year bond, and it's also very bearish in terms for, you know, for the overall stock market. So there's that for the 30-year bond. So here is the QQQ, the NASDAQ. We closed outside of the lower level of the B band, which is a good sign that we could reverse soon, right? But that still doesn't really mean anything. There's still tons more room to the downside. And, you know, because the 30-year bond just broke down below a major level of support today, we can definitely see much, much lower prices. We can easily come back and retest 366, even break down below 365. I really do think that even 370, I don't think 370 holds. So yeah, because just looking at how messed up the MACD is on the NASDAQ, it's way, way worse than the SPY or the IWM. The price here on the NASDAQ is almost the same price as it was back here when the MACD was oversold. So now, you know, if you're going by that logic, how much lower will the NASDAQ fall in price as the MACD falls? All right. So that is basically what I'm looking at. There's still tons more room to the downside on the NASDAQ as well. But that would just hopefully give very, very good dip buying opportunities. That's what we want to see. We want to see overextensions to the downside in the main equities indexes. So in the SPY, we want to see it completely just plastered. That's when we're going to buy into dips. Same for the NASDAQ. So we really, really want to see extreme weakness in the markets. Those are going to be much, much better buying opportunities. Those are going to be higher success rate buying opportunities. So that's really what we're looking for. The NASDAQ looks very, very bearish. SPY looks very bearish. The IWM's garbage. So yeah, 366 I think is the next target to the downside. So just this MACD is very, very bearish too. The RSI isn't even oversold yet. So all of these indicators are showing that there's still tons more room to the downside. And essentially, there's my analysis for the overall stock market. Oh yeah, also we bought into calls over the weekend. Those calls didn't work out. They were down 30 or 40%. I posted them on Twitter. I said that, you know, the market could go 50-50. I showed that, you know, the 30-year bond is showing tons of weakness, but the equities, they closed above levels of resistance. So I took that as a, you know, it was a cheaper buying opportunity. But clearly we can see now that the correlation between the 30-year bond and the equities is clearly there. And we definitely are not going to get bullish on equities until we see the 30-year bond starting to turn or hold support. That's what we need to see. All right. So there's my analysis on the stock market. Let's go ahead and talk about the crypto market. All right. So here's Bitcoin. We're clearly still filling at this downtrend level. I was mentioning this downtrend level. I was mentioning these, you know, prices here. And I was saying that, you know, if we fail at these levels, we're going to break down below 40. So it looks like that's what's going to end up happening. Unless we can consolidate a bit longer and hold above 40,000, by that point, the MACD will become a bit more cooled down. But I still don't think that, I could be completely wrong. This could just be at a very amazing accumulation period. But right now, we are failing at this uptrend level, and the MACD is still extremely overbought, and the RSI started to turn upwards. So we don't want to see sensitivity on very small bullish moves. When there is sensitivity on the RSI on very small bullish moves, that is usually very bearish. There's no reason for the RSI to start turning upwards here on a very, very small, minuscule move. That's very terrifying, okay? Because if, say for example, if Bitcoin moved all the way up here, then the RSI would have moved much more dramatically. We don't want to see that. Do you understand? We would much rather see the RSI do nothing, and the price of Bitcoin going higher, okay? That would mean that there's so much more room to the upside. So I hope that makes sense to you guys. But overall, right now, this is not a very bullish scenario for Bitcoin. The indicators are showing weakness still, right? So there's that for Bitcoin. Let's go ahead and take a look at Ethereum. Ethereum, same thing, clearly failing at this level, failing at this downtrend level. We had 2 days that we were trading outside of it. We opened outside of it once, and then we just completely fell on our face and had huge red days so far. So now, at least the MACD is falling downwards much better than Bitcoin, right? And the RSI is showing very slight weakness. This is bearish because if you're a bull, you want to see when the price is red, you want to see the RSI fall much more dramatically. But the fact that the RSI looks like it's staircasing its way down when there are aggressive moves on Ethereum shows that there's still tons more room to the downside, which is why I think that Ethereum also falls down below 3,000. That would give more time for Ethereum to become oversold on the MACD, for it to cross down below here. And then once we're here, it'll give much more steam to the upside, which will potentially be a good dip buying, bouncing opportunity for Ethereum. So that's what I think will end up happening. But of course, if this 2950 or 3000 level holds on Ethereum, then my analysis is incorrect. But currently, you know, what I've been saying on Bitcoin has been happening. So that's what I think is going to also happen on Ethereum. I was saying this entire time that we were going to come back and retest, you know, these fib levels here. When everyone was thinking that this was the bottom and we were going to make new highs again, I was saying we're going to come back and retest this trend line. We can even, I also said we can come back and even retest this trend line, but we would fail. What happened? We came back and retested the first trend line, failed completely off of this trend line, and made new lows and broke down below 40. So, yeah, there's my analysis for the crypto markets. I hope you guys enjoyed the video. Make sure to like, comment, subscribe, follow me on Twitter, follow me on all that stuff, and have an amazing day. I'll see you guys tomorrow. Thank you.